right now. But yeah, so we have business as normal on SP 500. Let me go ahead and we can mark up some liquidity, guys. Obviously, for those of you guys that are familiar with the strategy, and if you're new, welcome. But the strategy is really simple. First things first, we want to wait for a sweep of liquidity, find a break of structure, find our entry point from there. One thing that is interesting, though, is we are in this 4-hour order block. We are technically in bearish structure after this push to the downside pre-market, you know, with this candle closure below these lows. You know, we've now flipped to bearish on the 1 hour. But higher time frame sentiment is still, you know, pretty bullish from the previous couple of weeks. So we're gonna keep this open to interpretation. We'll see what we get. Let's drop down to the 15-minute. One thing that is interesting that I don't know if any of you guys noticed, if you guys mark your new week opening gaps, the last 2 weeks, this week and last week's new week opening gap, actually overlap, which is what this yellow parallel channel is. So that's interesting. So part of me makes me want to, you know, use this as a bias in a way, and, you know, maybe see what we talked about at the beginning of last week, which is a push to the downside to fill in some of this old weekly imbalance before, you know, another continuation to the upside, if that's what the market is trying to do. So that's what we could be seeing taking place right now. But let's go ahead and I'm going to mark equilibrium of this range. For now, this could change, obviously, if we just keep pushing lower. But I'm going to mark this. And I'm going to be patient. Obviously, it's literally the day after Easter, so no need to go crazy with anything. But there's our equilibrium right now. So what I would like to see if we're going to sell, guys, is I want to for sure see a push. I want to see a push up to equilibrium first, which would make sense because then we'd fill in this imbalance. Tap this equilibrium, maybe tap into this order block. This is probably an order block on what, like the 30-minute, 15-minute? Yeah, 15-minute time frame. So yeah, let's just be patient and see what we get. Otherwise, what we could wait for if we don't get a sweep of these levels of liquidity is, since we're in a 4-hour order block, we could wait for us to get a displacement to the upside, pull back into a fair value gap, and then we could look to enter off of that. All right, so we can track this high, guys, because we've taken this level of liquidity now. So I'm going to mark this. This is where we can anticipate a break of structure. Damn, we're coming fast. And this is just like a normal stop loss for us. So we're not super volatile. We're not super slow either. And let's see here. We'll make our TP1. With spread, we might as well make this just a 5-point TP1. But this might change, guys. Obviously, depending if this candle closes bearish, we'll have a new high to track right here. TP1 right now. Extend this up, and then we can actually plan on taking this all the way to, you know, equilibrium, which we talked about, if this ends up being the move. But if we just keep pushing lower, that's fine as well. We'll take this sell side. Either way, I am good with it. But let's see here. If this closes bearish, we'll move down to this high. There we go. So we're moving down. Tracking this high, that means we can move our TP1 down as well. I'm gonna say we'll take it right down to these bodies right here. Actually, no, we can get 5 points out of this. $30 seconds before this candle closes, guys. If this closes above here, we can wait for a pullback, or you can enter right off of the break of structure. So get ready. Try to send this quick. All right, so I'm just hovering over the buy button depending on how this closes. I'm going to wait for a little bit of a pullback personally. Probably down into this level. If we get a pullback down to this red line or under, I'll take the buy. Stop loss right below this low. Oh wow, this is nice and this is really tight. You could have entered right off of this if you wanted to. I did not realize that it was still less than 5 points. Really, if we get a pullback down into like here, I'm gonna enter. This is a nice little volume imbalance right here. All right, I'm gonna go ahead and enter right there. Filled me like right here. There we go. Stop right below the low, guys. Account for spread. TP1. Yeah, let's just go right here. The reason for it is just because we kind of have this low here, which we broke. This wicked up into it. So if we fill like half of this wick, this will be a good TP1 for us. And this is entry is 78, 83, so that's 5 points. So just make TP1 5 points. If that means 5 points for you is up here, or even a little lower, make TP1 5 points. I think this move can give us five points at least. So you can partial, remove your risk, go stop to break even, and then we'll target higher TPs. There we go. Yeah, I would really feel great if we could push up above this wick and close. But we do still have some imbalance in here, guys. So if you missed the entry altogether, you know, it could come back and grab this before going higher. It might not though, so sometimes it'll leave that open for later. But we're coming up on take profit 1, and let me know, depending on where you got filled at, when you guys take profit or you move your stop to break even. I'm gonna go at 5 points, which for me is right at this green line. Just hovering over the button. Come on. Oh my gosh, this is such a tease. There we go, TP1 hit. Okay. I just took a partial. I'm going to move my stop to break even, guys. Let me send this quick. Uh-oh. There we go. All right, let me know if you guys took profit. That green line is TP. That was TP1 for me, yeah. So at TP1, I take off about half my position, and then I let the rest ride. And then I move my stop to break even. So we're risk-free right now. We're risk-free right now. The only thing that could be a problematic for us is if we came back to this fair value gap, which I, outlined, which, depending on how you want to play it, you could it all depends, right? I'm gonna mitigate my risk. It's the day after Easter, so I'm totally fine with getting my little bit of profit here, stopped at break even. Most days, guys, will be like that. Most days you're gonna get take profit 1 or 2, get a little bit of profit, and you're out at break even. That'll probably be, out of our profitable days, that'll probably be like 2/3 of those days. And then we'll get days like we got, you know, Monday, which were perfect, and they just went straight to take profit 4 without any pullbacks or hesitation. But you know, trading is more so about hitting your singles and your doubles, right? Getting on base. Home runs are not as, they're really not as common as social media would have you think they are. But I really like our analysis from the higher time frame down, guys. I mean, we're in a 4-hour order block, which is what we literally got. We got into a 4-hour order block. We swept lower time frame, sell side liquidity, got a push up, break a structure, took the entry. I mean, we executed this perfectly. So, all right, what are we gonna do, SPX? I mean, it's like it was right there. Yeah, I'm out. They got me.